Good day, folks. So let's take a moment and review the last month of what came out on the other side of this earnings better and what got absolutely devastated. We'll also roll back and unveil the earnings behind the likes of Palantir. Is that an AI pump and dump? The stock's tanking pretty bad today. We'll compare it to Tesla. There's a lot of comparables people are trying to do that don't make a lot of sense. We'll talk about Berkshire Hathaway. We definitely got to get into these two dividend stocks as well that I think have been proven in this so-called recessionary environment, the utmost recession proof. And if that is a conversation you'd appreciate, as always, just hit that like button, folks, because taking a look at the 1 month here, just in the heat map, it's very intriguing to see all the stocks that got overhyped, Microsoft, Apple, that ran to all-time highs are taking a breath back. And the ones that have kind of been, lackluster and, not seeing the same kind of push, like Google, Meta, Amazon, have definitely been picking up nicely here. There's some lower half ones here in the banks that have been doing well. We know Berkshire Hathaway was actually picking up some more. Bank of America. He was selling some of the energy stocks, as we will see, like Chevron. Even the lower energy sector has been doing really great, like Occidental Petroleum. Those kind of businesses. It's been a pretty mixed bag across most sectors. Home Depot's doing very well after the dips. J&J's doing really good in some of the pharmaceutical sector. The two dividend stocks I want to discuss will be Procter & Gamble and Pepsi. They're just consistently like the utmost stabilizers to a portfolio. But taking a look here today, it's been bloody. It has been red. The bull market still seems relatively strong, but we're starting to take those breaths back. And it's going to be neat to see how this kind of unfolds, because yesterday the breath was taken and the dips got bought up. We'll see if the same thing happens today. We're seeing Palantir down only about 7.3% on the day. TSM pulling back. Most stocks, PayPal, it seems like almost everything at this point is just turning into a bit of a buying opportunity. I start maybe accumulating these dips is probably a good place to start doing so. But let's talk about Palantir. It's been a bit of a hype train, to say the least. I'm not a big fan of it up here. I'm probably going to lose subscribers just talking about this because their earnings I think they're just overhyped. You listen to Alex Karp. I talked about this in a video 3 months ago. He was saying people were lined up to use their software. They were getting people calling them now. They weren't chasing people. They're in an incredible position of this AI revolution. Meanwhile, sales and marketing went up, even though it didn't really correlate to any incredible growth numbers. Research and development went up. I thought this company had a moat that they were 4 years ahead of the business, against the competition. So they're still spending a lot of money on research and development for a subscription as a software as a service business model. I was just to be expecting more from the profitability standpoint, because all their money just comes from interest income. $30 million from interest income, from operations, $10 million. They're doing $1 billion in share buybacks that everyone can't shut up about. Yet it seems like they can barely buy back some of their probably just stock compensation from employees, because they've done a huge amount of dilution. $1 billion, I think, only buys back over 50 million shares. So that doesn't even nullify itself out, right? So that's not very exciting. So they're going to get listed on the S&P 500 because they're perhaps they're going to be able to qualify next quarter, because they've had 3 or 4 quarters of GAAP profitability of 1 cent. Ooh, very exciting. The GAAP income from operations at 10 million is only a 2% margin. Ooh, very exciting. The revenue growth rate was only 13% year over year. That isn't really that astounding if that's all we're going to be basing the value of Palantir on, and not any kind of GAAP profitability, right? So just take a look at this, because I want to compare it to Tesla real quick, because everyone seems to be doing these side-by-side comparisons like they're the same companies, even though they're dramatically in two different atmospheres. Take a look at Tesla first and foremost, which came public around 2020, right when they were going through a slower sales volume period, because that was during the pandemic. And that's when their sales dropped down to 2%. They had 130% quarter. But historically, even in this current macro environment, they're getting 47% revenue growth numbers. Their numbers are always in the double digits, like anywhere from 20 to 100%. How incredible that is at the scale of generating, 80 to getting close to that $100 billion in annual revenue. Whereas Palantir has only been slowing down. They're down to 17%, only generating just under $2 billion. And now we're down to 13%. And this is a company that I always feel like Alex Karp is good at keeping the carrot in front of the donkey, always reminding you of what's coming tomorrow, but can't really represent it in today's value. And all they'd really have to do is cut some marketing. And if they cut some marketing, would that really stop the growth of the business? It'd give them an incredible bump in GAAP profitability, but would it hinder the business? Is that what they really need to be spending to keep that growth rate up? Or is the business as resilient, as he said, and everyone's calling them up and they're just being able to grow at a great level? I don't know. Like I said, it's too confusing for me at these levels to want to buy it, so I just avoid it. But let's talk about some of these other stocks. Berkshire Hathaway, I should also point out Tesla's been tanking a little bit here too, because the CFO stepped down and he was supposed to be the perhaps lined up to be the next CEO. A lot of controversy around that and some of the stress. I'll put that aside. I'll let you guys contemplate that one. But Berkshire Hathaway has been proving quite resilient, hitting an all-time high here which is really nice to see, up just over 1%, pretty much from its all-time high after it just posted earnings, which I found very intriguing because he always gives insight into the boring ways of the Buffett, the billionaire Buffett here. Buying more Apple, surprisingly, in Bank of America, but he's got American Express, Coca-Cola. It's important to point out that it says his portfolio is 46% in Apple, but that's like his publicly traded portfolio, not his private. We don't really know the percentage comparables to the private companies at the moment, but you're taking a look at Apple here. He added 2% of Bank of America, 5% of Occidental Petroleum, sold almost 20% of Chevron. HP, he added 15%, down 20% in General Motors. I don't even know why he owns this. General Motors hasn't been like the best stock for a long period of time. Activision Blizzard, down 70%. Is there anything else that's really intriguing here? McKesson Corp, we know he liquidated the vast majority of his banks, his regional banks, US Bank Corp, Taiwan Semiconductors, Bank of New York Mellon, which all kind of went up nicely pretty much after he sold them, which I thought was relatively laughable. But nonetheless, Berkshire is still just crushing it. Something that I've never bought, but I've always kind of wanted. It's one of those ideas that I've been like, I should own some Berkshire. I just never did it. Do you guys own Berkshire? I'd love to hear about it. But if we're talking about some really good stocks that I still have on my ride or die list, that at some point, now that I have capital after this real estate purchase, I may start to add to my RSP at the beginning of next year. Talking about things like Procter and Gamble here, which is just trying to crack its all-time high. But when we talk about the 5-year performance, just absolutely crushing it. And what I find most intriguing is in these earnings, we get some real insight into the economy, with beauty and baby, feminine and family care products seeing the most growth. And beauty has just been on fire lately. I wonder if that's related to TikTok or some of those trends. But when we take a look at gross profit, they did $20 billion in net sales with $9.9 billion in gross profit, up 14%. They're generating almost a 50% gross profit. You know how incredible that is? This is like tech company kind of gross profit levels, let alone the dividend growth. If you bought this thing 20 years ago, you get a 16-cent dividend. Today, you'd be getting 94 cents. And it's very similar to even the likes of Pepsi here. Not as stellar of a performance, but you buy these because they're steady eddies during rough times. They offer a lot of resilience, and they kind of remove some of the volatility to one's portfolio, right? But take a look at the net revenues here, 22 billion. With gross profit at 12.2 billion. Again, absolutely astounding. I don't buy Doritos as much as I used to. They're damn expensive. But nonetheless, these earnings down. Look at the basic earnings here, because on the the 24-week period, it's actually down slightly, but quarter over quarter, year over year, sorry, 199 basic versus $1.03 back this time in 2022. Pretty astounding stuff. And with that dividend here, you take a look at going back to 14 cents, where today you're getting $1.27. It's just utterly awe-inspiring, to say the least. But there's a lot going on in this market right now, and it's hard to wrap your head around, which is why I've never really fast-paced into any of these stocks. I mean, Shopify's getting hit, PayPal's getting hit again. These are stocks that I love to follow. MPW is getting hit here after its earnings, that medical property company. We're getting the bank earnings here in Canada very shortly. I've just been taking a breath, and I'm just watching while I just kind of continue to stack cash while I finish up revitalizing myself after this big real estate purchase. So I'm just trying to figure out where I want my army to go. And I'm not in a rush for it outside of cost averaging into index funds, because it's a very tough market to wrap your head around. It's hard to tell if we're coming or going, overvalued, undervalued. So just be very cautious when you're buying some of these more hype stocks like Palantir, in my opinion. Could be a good speculative play for your portfolio, but I wouldn't be buying it just because people are saying, oh, it's listed on the S&P 500. Oh, it's the next Tesla. There's nothing on the balance sheet that really resembles anything that's that profound in the current moment, right? So it's just an interesting market, but I'll pass that question off to you. I'd love to know what you think in that comment section below.